What's up, investors and traders? Today I'll speak about 3 stocks to buy in September 2022. So let's start with the first stock. Of course, it's Netflix. Let's check this out. The chart, we can see it's a weekly chart. So from 2003 it's a rising channel, and now we are trading in the lower border of this channel. Let's switch to the weekly chart. There is the momentum. We can see that it's now very low. It's 39 also only, so not bad position to start to buy the stocks. If we will look closely at the chart, we can see the waves here. Elliott wave. So it was the first wave, then correction in the second, then the third wave, then we had the range like some kind of correction for the fourth wave, and then the fifth. After the impulse, of course, usually we have a correction, a clean ABC move here, and in my mind, of course, here I hope that the correction is finished. So from here we can start to buy this stock. Actually, I started to buy Netflix at the level about 200. Now in my position is showing a small plus. Also, let's check out the fundamental of Netflix. From here we can see the total score is 80. It's clean, nice score. Its financial position, we can see it's very nice. Its debt to EBITDA is less than 1. Interest coverage is very high, and also the cash to debt ratio is about 40, so it's okay. The profitability, we can see that very high rank, very high mark. The gross margin is 40, net margin is about 17, so very high margins for Netflix. The growth trend, we can see that revenue, EBITDA and EPS showed us very high figures, double digits, and the EPS and the revenue for the future years is expected to grow 10% and 8% from the revenue. And let's check the value of the stock. We can see the P ratio, price per earning, is about 20, and price per sales about only 3. For this marginality, 3, it's not expensive, so for me it's now the value of the stock is very cheap. Also the liquidity ratio, we can see that current ratio, quick ratio is about 1, so also it's a very good sign. And let's check the historically price per sales ratio. We can see that now it's only 3, so it's even cheaper. It was 2 years ago, 3 years ago, so you can buy the stock at the levels of 2013, 2014, but all these years the company showed a very nice net income, made buybacks of its stock. So for me, it's much better to buy a 3 PS than, for example, 10 PS. So this it's also one of the reasons that now I'm continue to buy stock of Netflix to my portfolio. The second stock for today is Google. Let's check its chart. We can see that now it's about after the split, it's about 100. Its price of one share. Here we have a very the major support level is about 15, but to get this level we should see a correction about 50, more than 50%. I'm not sure it will happen in the future years. Because the current price is for me it's nice, it's okay. We can see that the P ratio is 20, PS ratio is 5, and its marginality, its net marginality, net profitability, it's above 20, so it's very high profitable company. Also the YouTube channel, you now watching me here, so using the Google services. And if we will use the Fibonacci levels, we can see that now from if consider it's only one wave, that now we had a correction of about 50%, so it's standard correction in according to Fibonacci. So from this level about 100 110, I think it's nice levels to buy the stock. Let's check its total score. We can see a number of 97, very high high mark. Any problems with that, we can see that the ratio of debt to EBITDA is less than 1, the interest coverage is 200, the cash ratio is very strong, so any problems, it's ideal company for me. Gross margin 56, the net margin is 25. So any questions? I don't have any questions regarding Google, the revenue, the EBITDA, EPS, it's continued to rise. To any problems with the free cash flow growth rate, and the future, of course, is double digits. The future growth of revenue and EPS. The P ratio, no, it's I sure it's a mistake here because it's about 20, but the PS ratio also, no, I'm thinks that it's a mistake, but anyway, we will check it in other place. But the current ratio, the quick ratio, cash ratio is very nice. And here we can see, let's check, let's move to the quarterly data. We can see that, yeah, it's very nice. The ROIC is much higher than the WACC, weighted average cost of capital. So for me, I think that's Google. Google is one of the best stock in the whole market for now. So here, yeah, it's the right PE ratio. So now it's about 20. Look, here it was the COVID crisis, it was the 21, and here, if I'm not mistaken, yeah, here it was a tough correction at the 2020, and it was 24. So now it's even cheaper than those years. So why not? Why not to buy one of the best IT stock in the market when we can see that historically, yeah, when, for example, we had a here crisis, yeah, it was 2008, 2012, it was also 20. We can see never in the history it wasn't lower. It wasn't 12, 15, 8. So the P ratio is for this stock is also all the times wasn't quite high. So as for me, also let's check the RSI, the momentum indicator. We can see in the weekly chart it's 43. So also it's one of the reasons that why not to buy the stock. So the second stock for today is Google. It's not cheap, very high terms of growth, and the momentum now we can see the last time it's what is the COVID crisis, when we felt to the lower border, it was time to buy. It's also now, if I'm not mistaken, Google have very big buyback program for the future quarters. So also it's can be a very positive moment for this stock. And let's move for the last stock for today. It's Zoom Communication. It's after it had the quarter reports last week, and after the report, of course, it beat it by the EPS, but didn't succeed in the revenue. It's less than 2%, but maybe it was over high expectation for this stock. So let's check the chart. It's a weekly chart. In my mind, we can see that it is decreasing channel, and here it's a clean ABC move. The wave A, then B and C, and I hope that here that the correction most probably finished. But then after a small bounce and the quarterly report, we can see that also we came back to this major support level. It's a level of 80. So 80, it's for the last 4 years, it's so strong and so major support level. But we can see that the horizontal levels, the horizontal volumes, that here it's very nice level. So most probably we can see a little bounce to this level, and in my mind it's a potential of a pretty 40% for this stock. So the momentum for the RSI here is okay. It's only 33 in the weekly standpoint, and let's check the profitability Also, one thing that all the time I consider now it's 4, so it's a profitable company. It's okay. And let's check the PS ratio. Wow, now it's really very cheap, very low. It's only 5. It's less than 6. Actually, it was when we had the COVID crisis in 2020 to 2021. It was more than 100. It was 60, 30, 40, 50. Now it's less than 10. So we can see that it's improving. And the last quarters also it's showing us that it's a profitable company. Yeah, so the technically and the fundamental analysis that telling me that maybe now is the best time to buy the stock. It's not cheap, it's okay. And personally I'm using this service in my work with my colleagues and my friends, and Zoom is the connection itself and the service is working very fine, very clear. So I'm personally buy the stock on these levels. I'm not caring about the S&P. The Nasdaq, of course, can fall another 10-20%, but if not now, I don't know when to buy the stock. So of course, after such a tough correction from the high level, Zoom is already down 85%. So it's very tough correction. So no, regarding Zoom, I think that's it can be one of the best investments for you for the future years. So in my channel I consider many stocks, American, Canadian, European stocks. So if you like this video, press the like button, subscribe into my channel, and see you on the next time. Bye.